A very good evening to each one of you. On behalf of Bangalore Chamber of Industry and Commerce, we welcome you all for this exclusive session on a ruling of the Honorable Supreme Court in the case of Safari Retreats, a discussion with the Honorable Senior Advocate Shri Raghuraman. Thank you very much, sir, for accepting the Chamber's request to address our members on this session. I'm Rupa, Secretary at BCIC. The session is organized under the aegis of Indirect Taxes Expert Committee, led by Mr. Badrinath, who is the partner of Singhvi and Unni LLP, co-chaired by Mr. Ankit Mundra, Senior Manager Taxation at Amazon, and mentored by Mr. P.V. Srinivasan, Partner and Chief Mentor of previous advisors. The Chamber acknowledges its support of our member companies who have been supporting us and who, by way of annual sponsorship throughout the year, we express our sincere thanks to all the member organizations. And thanking you once again to all the participants for making it convenient to participate in this session. I now request Mr. Ankit Mundra, the co-chair of the Indirect Taxes Expert Committee, to take it over from here. Over to you, Mr. Ankit.
Yeah.
Thank you.
Thank you, Rupa. Thank you for this introduction, and we welcome you, sir, for this discussion. I think it's an absolute honor and pleasure from our side to have you on this discussion and to understand from you, primarily as the counsel for the respondents, to understand the first-hand view of this ruling, this important ruling which has come last month. I think as a tax professional, I think we look forward to such landmark rulings which can sometimes really shake the fundamentals of what we understand about tax. And I'm sure with this session and your insights, all the attendees of this call will be further enriched and go back with a broader understanding of this provision. Before we start, I would just like to give a quick introduction of Mr. Raghuraman. Mr. Raghuraman is a senior advocate. He's a qualified chartered accountant, a CA, a CS, and a CWA, and also an LLB. He started practicing as a CA in 1990, and in the year 2004, he switched over to the legal profession. He was designated as a senior advocate by the High Court of Karnataka in 2021. Mr. Raghuraman appears before the Supreme Court, the High Court of Karnataka, and various other high courts. He's also appeared before the Company Law Board, NCLT, and the SISTAT and other judicial forums. Apart from this, Mr. Raghuraman has also been a visiting faculty at IIM, Bangalore, and the CA Institute, and has been an author of many articles and books as well. Sir, thank you very much for accepting this invite and to share your insights. To start the conversation, I would maybe just take a liberty of starting with some facts, and then probably we can go into the legal analysis from your words. So I think this case primarily emanated from a High Court ruling in 2019 from Odisha, wherein a developer of a mall wanted to take credit of the inputs which were used for constructing the mall, which was further intended to be rented out. And with the premise and considering the substantial cost that goes into the building of a mall, the intention was to avail the credit of all these inputs and input services, including items like cement, sand, architect fees, etc., to avail the credit. And upon the construction of the mall, the idea was to use this accumulated ITC against the outward tax that was payable on the rental income from this property, right? I think in the High Court, he was able to build a case on the constitutional validity, and the High Court also read down the conditions of 17(5)(d) and allowed the appeal, which was further appealed against in the Supreme Court. I think, sir, over to you now. We would like to just understand from you about this, the different perspectives that were presented from the ASG side as well. I think there were some very strong arguments, even acknowledging that there were defects in the drafting of the law, which was a very bold statement to make, I believe, in the Supreme Court. But also from your side, sir, what were the how did the case go about, and what do you think was the most critical insights that we can draw from this?
Yes, thank you so much, Mr. Ankit, and I also thank the organization for inviting me to share the thoughts on this decision of the Supreme Court. Now, Mr. Ankit, you have very nicely and succinctly given what are the facts of this matter. Essentially, this I want to construct a mall which I want to rent out. I buy cement and steel and other input services. The case before the Orissa High Court was, if I buy cement, steel, build the mall, and while I am building the mall, if I sell, you allow me the credit because I'm paying tax, GST on the output. Now, if I keep the asset to myself and then rent it out, there also on the rent I pay the GST. Why are you denying me the credit? This is a simple case. So the Orissa High Court said, how can in both the cases there is a GST payment that you're getting? One in lump sum, one of course in probably in installments. So both of you are placed in the same situation. So there should be no denial of credit to the person who takes the credit and pays the GST on the rental. What is the big difference between the two? Anyway, GST is being discharged at the end stage. This is the case before the Orissa High Court, and this is all that the Orissa High Court said. The only issue was that the Orissa High Court had allowed this petition with just one paragraph. There was no detailed discussion. But thankfully, the government, when they took it up in appeal before the Supreme Court, they didn't insist that it should go back to the Orissa High Court. This is one thing that, they said that we would rather have the Supreme Court settle this matter because it is an issue which arises across the country, not restricted only to Orissa. So we had the opportunity of, presenting the matter before the Supreme Court. It went off on over 5-6 weeks of, argument, because they would take up this matter on Wednesdays and Thursdays and every Wednesday, Thursday, and for more than 4 or 5 weeks it went on this. And I must appreciate the judges who formed that bench, who are willing to, listen to us at this length. We will have to give credit to the judges. We'll also have to give credit to the ASG for, the fact that he didn't want to find an easy way out and say, well, let's remand it back to the Orissa High Court because they have not, dealt with in detail, and all that was not done. It was a straight, what do you say? It was a straight debate at the Supreme Court itself. So to that extent, we have to be thankful to all the parties concerned. And the Supreme Court also allowed a lot of discussions from other advocates whom they felt would be able to add value to the discussion. So that was very nice of them to have accommodated many people in the before they came to a conclusion as to whether it is constitutionally valid, invalid, whatever. See, ultimately, all that we require is that we should be able to present the case fairly, and the decision is ultimately the court's decision. There's nothing you can do about it. But if you have presented your matters properly, there ends the matter. And from that point of view, I think we had been given a very, very good hearing overall. This is where I would start the discussions, because it was essentially a government appeal from the Orissa High Court decision. So the government made very elaborate submissions as to why the entire let me put it this way, the entire conspectus of the case boils down to whether your link, where does your input tax credit link start and where does it end? This is very important for us because when we strategize this among the seniors, we had strategies that we want to concentrate on ensuring that the parties who came before the courts ultimately should get the credit. The input tax credit should be available to them. That is the overarching consideration for all of us. So our, let me say, our focus was to ensure that we say that the government's idea of the input tax credit chain itself is not correct. And that I'm so happy to say that the Supreme Court recognized that. What did we see? What did we say actually? We said this way. The government would say that you buy cement and steel, you construct the mall. When the mall is constructed, an immovable property comes into being. Once an immovable property comes into being, it moves out of any list, it moves into the state list as an immovable property and sale and etc. So stamp duty is collected by the state. So you're moved out of the input tax credit chain. Then a new chain is formed for rental after the building comes into existence. Very attractive kind of a argument put forth by the union government to deny the credit to the assessees. So we had to take that argument head on. So at least 2 or 3 of us concentrated on saying that the input tax credit chain, if you look at section 16 and section 17, that gets recorded in the decision also. The fundamental section for availment of input tax credit is section 16. I should be first eligible to take credit. Then only the question of 17 apportionment happens. If I'm not at all eligible to take credit, there's no question of apportionment. In fact, we had shown the Supreme Court the decision of the House of Lords in Redrose decision, where they discuss these aspects. And then they say that availment is fundamental, apportionment is only secondary. So he said you should read 17 as subject to section 16. And then if you look at it from that point of view, the cement and steel, the credit is available. Nowhere it says the credit is not available. Now, what 17.2 and 17.3 does of the GST Act says is that without breaking the chain, we have a formula for you to reverse the credit or apportion the credit between what is taxable supply and exempt supply. Basically, the function of section 17 is that if you have 100 rupees available as credit, if a portion of it is used for personal purposes or you're using it for exempt supplies, to that extent tax is not available. So we got this distinction and we told the court that 17 doesn't take anything out of the chain. The chain remains. All that it says is that one portion of the credit in the chain will go out. But the transaction remains in the chain. Whether you sell the building or you keep it. If you sell the building and then you exit completely, there's a different question. That you're exiting the chain itself. But if you choose as an investment decision to keep the asset and rent it out, your decision is to remain in the input tax credit chain. And this very, very important observation of the Supreme Court is that the chain is not broken. That is very important, and that we wanted that to happen. And we are thankful that the Supreme Court clearly understood that just by entering into a leasing transaction of a rental, you are not going outside the chain. Now, if you don't go outside the chain, then you remain in the chain, then you are entitled for credit. That really is the crux of the issue. How much credit? It may not be 100%, but you will get some credit. It is from that standpoint of view, I think, we were able to convince the Supreme Court. And going forward, the argument that you move out of the chain, you come back again and all, is an argument that the government will find very difficult to establish before the courts of law in the framework in which they have done the CGST Act. So that, I think, was an important observation of the Supreme Court, and I'm very thankful to them for saying, if you look at it, they say, this is what they say. They set out the schedules in the CGST Act, and then they say leasing or, renting of property is something on which you collect tax, whether the building is, whatever you may do, you choose to do. Keep a portion of the building, you sell a portion of the building. But the fact is that if you do keep a portion of the building and you want to rent it out, you're there in the chain and you pay taxes. If you pay taxes, then you should get the credit. It's a good, very good observation of the Supreme Court, which will help you probably in other transactions where you may have similar things outside of the real estate industry. You may have several situations coming up where the credit would be available as a result of this decision in Safari Retreat. That is one aspect of it. The second aspect of it, which, of course, what does the Supreme Court really say about this is how the assessees and the government were on the same page in understanding the transaction. Essentially, they felt that there are two provisions in law, 17.5C and 17.5D. Now, if I buy the cement and steel and I construct it using maybe a contractor, this is a case where I am doing the construction on my own account. I am doing it. I'm using third-party contractors to help me to finish this immovable property. This will fall under 17.5D. The other way of looking at it, the other way is, I will not buy anything. I will simply farm it out completely. A person who wants to build may say that I am not capable of building this mall. I will give it to an external agency, L&T or whoever it is, to construct and give it to me. So they will construct the entire building and then give it to me. That will come under 17.5C as a works contract services. These are the two methods of doing. And therefore, there should be parity between these two methods in tax treatment. This is how we approached it, and this is how even the government also approached it. But Supreme Court said no. 17.5C, 17.5D are completely different provisions in law. This is how they saw it. And in doing so, there are certain observations of the Supreme Court that would make it difficult to operate the 17.5C model, but would make it easier to operate the 17.5D model. I may put it that way. Broadly, I would put it that way. And I would also show you how the 17.5C model can still work. That's the objective of this session, if I may say so. So in dealing with these two things, what did the Supreme Court say? They said 17.5C is a works contract. If you make a works contract for a plant and for an immovable property, any immovable property, it is excluded from input tax credit. There are two exceptions to this, and that exception is that if you're a subcontractor for another main contractor where you yourself are also giving a works contract service on the output, you're eligible for a credit. Second, if you utilize this works contract services in making or constructing an immovable property, which is a plant and machinery, as defined in the Act, you can have the credit. The plant and machinery in 17(5)(c) is defined as an apparatus which is or equipment which generates revenue or which is used for further supply of goods or services, but does not include land, buildings, and other civil structures. So the Supreme Court drew this distinction between 17(5)(c) and 17(5)(d), where in 17(5)(d) they use the terminology plant or machinery. They don't use the terminology plant and machinery. So the Supreme Court said 17(5)(d) is structurally different from 17(5)(c). Both are constitutionally valid. So to that extent, they upheld the union government's appeal. They said there is nothing wrong in having restrictions in the input tax credit scheme, and therefore we can't find it constitutionally invalid. But they said these two provisions are completely different because of the usage of the terminology plant and machinery, plant or machinery. Plant and machinery is a restricted definition. Plant or machinery is a very wide definition. This is the basis on which Supreme Court differentiated these two provisions. And to take the discussion forward, in 17(5)(c), as it seems from a reading of the Supreme Court judgment, it appears that because plant and machinery is defined in a particular manner, and there is an exclusion clause of land, buildings, and civil structures, the Supreme Court didn't do, there was not more than 2 or 3 paragraphs which have been devoted to 17(5)(c). As I saw it, most of the discussion comes to 17(5)(d) only. So when you look at 17(5)(c), it looks as if those who adopt the model of giving out the mall construction to a works contract service provider doesn't seem to be getting the credit because he falls in 17(5)(c), and the mall itself being a building. The plant and machinery definition in section 17 excludes the credit. This is one view. I will come to the alternate view, which I will propose in some time. But I'm just summarizing what the Supreme Court is saying. So it looks as if 17(5)(c) prima facie, the Supreme Court says that unless it's a plant and machinery, there's no credit. And when they say it is a plant and machinery, they also bring about this important qualification. They say when you use the terminology plant and machinery, the plant should have characteristics of a machinery, and machinery should have characteristics of a plant. And if it is a land, building, or civil structure, it is excluded from the scope of credit. That means the cement and steel used in a mall, which is a building, prima facie under 17(5)(c) is out of the credit mechanism. This is what I would say is the understanding of the reading of the Supreme Court judgment prima facie. But then when it comes to 17(5)(d), 17(5)(d) is a situation, as I've told you already, is a situation where I buy the cement and steel myself and start the construction myself. I may use an outside contractor, but I do most of the work. This is a case where plant or machinery is used. Now, the government wanted to save the day for themselves by saying that these two terminologies are one and the same. You can't make a discrimination between 17(5)(c) and 17(5)(d). So these two are very much the same description. And therefore, what you apply 17(5)(c), you'll also have to apply 17(5)(d). If that argument was accepted, you will never get credit for any of the mall constructions. Supreme Court said, just ruled it out. In their decision, they said, we are sorry. The learned aegis said that plant and machinery is used in many sections of or rules of the CGST, but plant or machinery is used only in 17.5D. That being the case, they said you should give a different meaning to this terminology, plant or machinery. We cannot use the explanation in section 17 to fix what is plant and machinery. So they said we will have to understand the terminology plant or machinery from the point of view of the Supreme Court and High Court cases which have been decided till date. They took it out of the statute and took it into judge-made law. And so saying, they have, let me put it easily, they have introduced a functionality test, which functionality test would mean that if your building under 17.5D fits into the definition of a plant. What do you mean by a plant or machinery? If, I'll put it this way, if I use the building to generate revenue or supply goods or services, then it's a plant or machinery. But if I use the building to house my business, then it's a building per se. It's not a plant or machinery. This is the, let me say, this is a layman's way of putting it. If my building houses my business, it is a building. If my building is itself used for generating revenue or supplying goods services, then it becomes a plant or machinery. In the first case, where it's only used to house my business, there is no credit which is available. In the second case, where the building itself is used to generate revenue, it becomes eligible for credit. That would mean that cement and steel, when I buy the cement and steel and construct a mall on myself, with the idea that I'm going to lease it out. In those cases, the building itself is used to generate revenue. I may have a mall where I, let it out to 100 brands so that they can set up and sell their wares, their goods. My mall I may have eating outlets. I may have theaters. My objective is that the building will give me a rental revenue. When I build it, I have an objective in mind that this building will give me a rental revenue. So the building itself is used to supply the services of rental. Therefore, credit is available. This is one of the most important, fallout of this decision is that they use this terminology. Say, if you look at 17.5D, it says, if you use this for constructing an immovable property, your cement and steel, etc., for constructing an immovable property, for your own use. Now they say, what do you mean by own use? Because we were able to show the Supreme Court that the government's own understanding of own use is that if they put it for personal use. So they defined own use into two categories. They said own use means personal use, one. The other is own use means you construct and sell. Own use doesn't mean you construct and lease. This is very important. So Supreme Court said if you construct and lease the property, there is no criteria of own use at all. Criteria of own use doesn't come. So you are eligible for credit if you lease it out. Because leasing means that you're not putting it to your own use. That is my personal use, or I sell it. So if my intention at the time of taking input tax credit is that I want to use this building to get me rental income, and if I follow the 17.5D route, not 17.5C route, clearly the credit is available. There is no doubt on that. The Supreme Court has rested that. In my view, even though the Supreme Court says the functionality test will have to be met, if you carefully read the provisions of 17.5D, if an immovable property, it need not even be a plant or machinery. Let me put this view carefully structured. If you read the section very carefully, if an immovable property is brought into existence for the purpose of rental, credit is available whether that property is plant or machinery. Because what the section says is, it says if it's an immovable property for own use, you don't get credit. Supreme Court says own use doesn't cover leasing or rental properties. So if my intention in the first place itself was to lease it out or rent it out, it need not be a plant or machinery. It may be a plant or machinery. It's a different thing. Because that I should be eligible for the credit. By virtue of leasing or renting being not own use, I get the credit. So that is a very important, probably it was like, operation successful and patient dead for the government as far as 17.5D is concerned, because they were successful in upholding the constitutional validity, but we were successful in getting the credit for the industry. So it was a bit of a shock. It was a bit of a shock for the government. But there are still, the gray areas where I would say that in furthering this discussion, what happens if I take cement and steel and build a factory building? But there is where I think there will be a lot of disputes coming again, another round of litigation. There's going to be another round of litigation where I put up a factory building to house my factory. Now, am I eligible for this credit or I am not eligible for the credit is the question that will come now. If a reading of this decision will see that factory buildings which house a business doesn't seem to fit into the criteria of plant or machinery. So they're completely out of the credit mechanism. That is one view. Now we'll have to fight this out in the court of law. Again, this dispute will start. Then, of course, what is plant? What is a machinery is itself a question of dispute in this country. We have had a lot of litigation on that front in the income tax side. In the income tax side, we have had whether the place where prawn is made, whether that is a plant or machinery. Whether a power station which is built, whether that is for supplying power, is it a plant or machinery? Whether a theater is a plant or machinery? Whether a hospital is a plant or machinery? Several such disputes have already come about. Fortunately, I think the question has been answered substantially in favor of the assessees as far as that test is concerned by the Supreme Court. Whatever the Supreme Court says on functionality test is simply this. Is my building used to generate revenue or is it to house? In saying so, they always have used this criterion, whether it is Karnataka Power's case or Victory Aqua Farms case. The Supreme Court has held that if it is an apparatus for generating revenue, then it becomes a plant, or it becomes a machinery, or it becomes an apparatus. So this distinction has been brought about. The only jarring note is Anand Theatre's decision, where they say a cinema theatre or a hotel only houses the business, it is not used to generate revenue. So there they have said that it is not plant or machinery, it's only a building. In such a case, what would be the impact? Let us look at a cinema theatre or a building. Let's look at a hotel building or cinema theatre. Now 17.5C, it may not fit. It's not plant and machinery. 17.5D also, it is not plant or machinery. But let us assume that this building is used as a... Can we prove that it is used to generate revenue? In my opinion, when I build a hospital and I lease it out, let us say I put a hospital building and then I give it to Manipal or Fortis or whoever it is to run the entire thing. It is very clear that my object of putting that building is to get revenue out of it. It's not for my own use. I am not going to sit there and do my operation. No, I'm not a doctor at all. So my objective of putting that hospital building, my objective of putting that is only to ensure that I get revenue. I am not a person who runs the hospital. It is run by Fortis or it is run by Manipal or whoever it is. So my intention is to make that building generate revenues. So in my view, as far as I'm concerned, it fits very well as an immovable property, not for own use. This is very important. It need not be plant. It need not be machinery, as said by Anand Theatre's case. Assume it is not that. But still in 17.5D, I should be able to take the credit. The reason being that I'm not putting it to my own use. Own use is defined as only two things: selling it or putting it to personal use. I don't fit in there. I straight away let it out for rent, and a rental model, whichever I give it to Fortis or whoever it is, I pay tax on it. So therefore, we are going to have disputes on it. See, the way the Supreme Court judgment is structured and the functionality test that they say, see, they have not taken the interpretation that I'm telling you now. So this aspect also will face litigation, because the department will say you don't meet the functionality test. It is not plant or machinery as far as theatres are concerned or whatever it is. And then we will have to use this, the theory that I am now proposing before you, to meet the challenge before the courts of law. So if you ask me, has the Safari settled it once and for all? No. But it's an important step in that direction. We cannot always say that, we always take this view. We say that, oh, the Safari judgment is going to generate more litigation. What is this? But that is the way the world is. You interpret it in a particular manner, but the rest of the people may not follow your interpretation. You can't force people to follow interpretations. They have their own view of saying things. So department, as usual, will have its own way of doing things. They may say that Supreme Court has said functionality tests should be followed in all cases. We believe this is not plant or machinery. So this important distinction between plant or machinery, plant and machinery, which the Supreme Court has made, will have to be followed by all the courts in India, now even the adjudicating authorities. So if your case falls under 17.5D and the show cause notices have been issued, saying that you're renting the malls and therefore you're not ineligible for credit. In all those cases, the matters will be decided in your favor on the functionality test. And the fact that you are actually using it as a leasing or rental model. So to that extent, in fact, I think by an early estimate, I don't know how far these figures are all true, but the government is concerned about the loss of revenue. In fact, they should never use this terminology when it comes to input tax credit. In my view, if you're paying taxes on the output, there's no question of saying loss of revenue. You're bound to give the input tax credit. That is the scheme. Very objective of the scheme is to give input tax credit to those who pay output tax. You can't say, I don't want to give output tax to this fellow, but since he's now going to get because of Safari, I lose 5,000 crores. That's a very bad statement to put out in the press or press releases. In fact, the government should be in a position to facilitate input tax credit and not, act as a stumbling block in the input tax credit. In fact, the chain, if you see, if you take the chain as a whole, this chain is put to a lot of stress because of the government. Otherwise, the chain itself will move smoothly. It is a tax department's interpretation of the input tax credit chain. I'm not criticizing the government unwantedly. From 1994, we have been having this. I'm not talking of a 5-year or 3-year phenomenon. It's going on for 30 years. The attitude of the people should change. They should not look at such a narrow view. Now, having discussed this, what the result of this discussion is that if your transaction falls in 17.5D, you are eligible for the credit. If you can prove it is plant or machinery, or you can prove that it is not for your own use, there itself it go. You will get the credit. Now we come to the 17.5C, where the Supreme Court says that if you are taking works contract services as your input tax, you're not eligible. Because the term plant and machinery has a very restricted use. In fact, this is what they say. As is reading the judgment, the word plant used in the bracketed portion of section 17.5D cannot be given the restricted meaning provided in the definition of plant and machinery, which excludes land, buildings, or any other civil structures. So what the Supreme Court is trying to say is that plant and machinery, in which definition appears in 17, is a very, very restricted definition. It excludes land and buildings. Because it excludes land and buildings, if you build the mall using works contract services, you're not eligible for credit. There, I have a slightly different take on this. I'll tell you why I have a different take on this. The Supreme Court itself sets out that 17.5C. If you look at it carefully, they very well say that plant and machinery is a terminology which is used for two things. If you look at the definition of plant and machinery, what they say is this. If the plant and machinery is defined as an apparatus, what does that apparatus do? It is used for supplying goods or services. If it is used for supplying goods or services, you can take a credit because it's plant and machinery. The land and buildings that is excluded are a general land and building, a building which is used to house the business. So if you look at it carefully, and this is something which I leave with the viewers, this the distinction that I'm trying to make is this. The functionality test is inbuilt into section 17. when you go into the works contract services 17.5C, the functionality test is inbuilt. They have not excluded all the lands and buildings. If a land and building is an apparatus used to supply goods or services, you're eligible for the credit, even in 17.5C. Unfortunately, this aspect, I would say, probably was not argued as vehemently as 17.5D. We should have argued this aspect and said that the functionality tests falls even for 17.5C. Because the intention of the legislature, if you look at it carefully, the intention of the legislature, see, this is what they say in the explanation is very clear. Plant and machinery means apparatus, equipment, and machinery fixed to earth by foundation or structural support that are used for making outward supply of goods or services or both. That means the functionality test is already inbuilt. This is something which probably all the councils, all of us, including the government, have missed reading and telling the Supreme Court that you are right in 17.5D in saying that, yes, there's a functionality test to be used. But even in 17.5C, the term plant and machinery, as per the legislature itself, has a functionality test. If my apparatus, if my building is an apparatus used to generate revenue, it says you can take credit. What it excludes there is only land, building, or any other civil structures. That means those civil structures which are of a general nature. A building which is put to house the machinery. A building that is built to house all your office equipment and your staff to sit. These general nature buildings are not plant machinery. Specific nature buildings will be plant and machinery as per the legislature itself. And this is a point which I think on all sides have missed. So the Supreme Court has probably not gone into this aspect at all, because none of us have pointed this out, that the functionality test, which now the Supreme Court holds good for 17.5D, was already there in 17.5C. So the plant and machinery, or plant or machinery, really, it doesn't make any difference. It really doesn't make any difference. But unfortunately, I think we missed the bus, I would say, in telling the Supreme Court that in 17.5C, the functionality test was inbuilt into the statute. That is an important miss. The second interpretation that could be taken runs along these lines. It's a little, what do you say? It's a little long-winded, but I'll give you the explanation. Now, if you look at 17.5C and 17.5D, what is it that is excluded? 17.5C, if I have works contract services as my input, used for constructing plant and machinery, which is an immovable property, I don't get credit. Credit is out. The 17.5D says goods or services are both received for construction of an immovable property, which is plant or machinery. Now, there's one important miss that the government has actually made. In Schedule Entry 6, if you look at Schedule 2 Entry 6, the government says works contract is to be classified as services. So the legitimate question that now comes is, would it not be covered in the definition of services in 17.5D as an input? So works contract services that are used for making a plant or machinery should be given the credit in 17.5D. I don't need to go to 17.5C at all. Even by the Supreme Court's decision that plant or machinery is different from plant and machinery, 17.5C is only works contract services used for plant and machinery. But if works contract services are used for constructing plant or machinery under 17.5D, you pass muster, you can take the credit because the 17.5D itself says so. It classifies a works contract as services. This is another important, what do you say, test which we will have to apply in the forthcoming litigation that is going to take place because of the safari retreat. What really are the other things that stand out in this? Now, the own use criterion, law of own use criterion in the UK, for example, is simply this. They say that if you put it for personal use, you should not take the credit. If you put it for business use, you can take the credit. In the UK law, the standard of judging is this, that if you use an input or services for economic activities, which includes leasing, rental, everything, credit is available because it's an economic activity on which tax is being collected. Now, that is why in UK law, they use the terminology own use. That same terminology we have borrowed, own use criteria, personal use as they call it. And therefore, the own use strictly means in Indian context, that is why the Supreme Court has given two meanings. One is own use means personal use, which is absolutely right. Second, they say is if it is used for selling of the building, then it goes into list 2. It goes into State Act. So when it is used for selling a building, then also it goes out of the credit mechanism. So to that extent, the own use criteria, the Supreme Court has defined into 2. If I use the services for constructing and I sell, you don't get credit. If I use the inputs of goods or services for constructing and I put it to my own personal use, let us say I use it as my house, there's no credit. But in all other cases, functionality test, and then I can meet that criterion, I would be eligible for credit. This is another important aspect that should be kept in mind. The only variant that I have told you is that even if it is not plant or machinery, if it is used, when you say leasing, it becomes own use. It goes out of own use criteria and it becomes a taxable service, and you should be in a position to take the credit. Now, typical examples we can deal with as we go. Now, as far as malls are concerned, let's assume that you take the credit, make a mall, rental model. It is completely covered by the judgment of the Supreme Court if it falls under 17.5D. Though the Supreme Court has remanded it back to the Orissa High Court to consider whether this malls can be treated as a plant or machinery, there is no doubt in the minds of the people that the functionality test a mall will comfortably meet. There is no issues about. Now let's come to another example where you buy cement and steel, construct a building and divide it into office spaces. Let us say you build 20 office spaces in a building. for the purpose of renting. You may sell 5, you may, rent 15, whatever it is. That also will fit into the Supreme Court decision in 17.5D. The reason being that you are constructing that building for the purposes of leasing it out. To the extent you want to sell, yes, no credit. But to the extent that you want to use it for leasing it out for office purposes, there's absolutely no doubt in my mind that you will be in a position, if you go under 17.5D, you will be able to take the credit. There's no problem with that also. Then let's look at a hospital which is constructed in a special manner. See, the difference between a building housing machinery and a building itself being machinery is that you construct the building in such a manner that it becomes a plant. If you look at Karnataka Power Corporation's case at the Supreme Court, it says that the building was constructed specifically to ensure that power will be supplied. It is not that you construct a building, then you bring in machinery plant and put it there and then start your business. It's not like that. You construct the building in a special manner itself, in a manner that it will do this function of power distribution or power supply. So the entire building was treated as plant in Karnataka Power because it is a specialized building. So that is going to be the test now. If it's a specialized building where machinery and plant are part of the building, the building is not used to house the machinery and plant. The machinery and plant becomes a part of the building itself. Then it becomes a plant. For example, a vault room which is constructed for, let us say, the banks. When I have to lease out the property to a bank, the safe locker room which I build has to be built specially. I can't build it just like that. Probably I have to invest 3 or 4 times the amount that I would do for building a room than when I do it for a vault, safe vault. That becomes a plant. Similarly, if I do a hospital where, a hospital building in itself, if you look at it, typically, in my opinion, is the operation theaters are built specifically. I have to plan it in such a way that it becomes a hospital. It's not that I take in today's world where robotics is used extensively, equipment of like CT scan and MRIs are put. The rooms, the entire facility has to be built in a particular manner. When I plan the building, I will plan it. See, it's like this. When I build a hospital building, I can't use it as a theater. At the planning stage itself, it has to be built as a hospital. I can't say I'll take this building. Okay, you put the hospital today. If I'm not happy with the hospital, I kick him out after 3 years and change it into a theater. That's not possible. Unless I'm willing to lose a lot of money which I've invested. That should be really the test. If my building itself is specially constructed for rendering a service or for supplying an output goods, then it becomes a plant. But if I have a factory building where I house 10 machinery, that building, because of this decision, will face some difficulty in taking credit because the courts would view it as housing a facility, not the facility generating revenue. This distinction, the functionality test, is simply this distinction. We are playing with English words, but this is the distinction which is made between the two. Yes, sir. If you have any questions, you can please ask me.
Sure, sir. I think one very interesting aspect of this judgment, or rather if I read this and the Odisha High Court judgment, is how we interpret the provision, right? I think Odisha High Court decided to read down a provision considering the economic aspects of it.
Exactly.
Right? And then the submissions made by ASG uh, saying that there's an error in the act was on the intention of the judgment of the act.
Yes.
So we had an economic aspect of the act. There was the intention of the act, which were trying to influence the way you interpret the law. But the court decided to read it in a very different way. It was more on the literal meaning of the act.
Yes.
So any insight that we can get from you on that, on how the interpretation of an act was influenced by this judgment?
Yes. See, there are two ways of looking at it. One is when you make a constitutional validity challenge, the onus is on you to prove that it is invalid. Government has nothing to prove. They say every law is constitutional. It falls on you to say it is unconstitutional. Now, in my opinion, surely there was an element of constitutional validity that had to be considered, which they considered a negative. But I believe that how the Odisha High Court went and how this judgment is structured, if you look at it, what are they trying to say is that they've actually read it down. In a way, in the course of interpreting, they've said this is available. It's an alternate way of looking at it. In the course of interpreting it, I am saying these are all available. So while the Supreme Court says it is, when you say it is unconstitutional, means they could not have made the provision. That is where the Supreme Court differs and says, no, they could have made the provisions and subjected it to conditions, which they have done. So we interpret saying that you can deny credit on immovable property, but you cannot deny credit on immovable property which is leased out. We read it that way. And that is how the legislature also has said. So the Odisha High Court should not have struck it down or read it down. This is the interpretation we place. This is the subtle distinction. So say they are trying to say legislature also wanted to give you the credit. So to that extent, they sided with the government saying that it's constitutionally valid. But then they said this is how we interpret it as the legislature's own interpretation, not our interpretation. This is how the legislature also went. That is why they upheld the constitutional validity.
Sure. So I think there's another linked question. It's also come in the chat box. Was that yes. What do we anticipate from the government? I know it's a very tough question, and I'm probably asking you to be an astrologer, but considering this has created a lot of interpretational challenge for the taxpayers, yes. And also there is a possibility of revenue protection as well here. So do we anticipate a clarification or maybe an amendment in the law?
I sincerely hope there is no clarification, because the more the clarification comes, more difficulty for us. Every time they will clarify 1 point and leave another 4 points open for dispute. So we don't want that to happen. 1. 2, whether they're going to do it prospectively, retrospectively, they amend the law, etc., etc. Let me tell you this is all speculative, but I would still feel this way. Fortunately, this government generally doesn't bring about an unfavorable retrospective amendment. They're very cautious of what happened in Vodafone's case. So because of that, they're a little cautious, and rightly so, that they don't keep amending laws retrospectively unless it gives a benefit to the assessee. You will have to give credit to the government where it is due. You look at the GST law in general, they have not done too many retrospective. They have done some retrospective amendments that hit you. But generally, I am finding that they are not doing a retrospective amendment to hit you from previous date. They can probably amend the law in future to say both should read as plant and machinery. They can do that. They can certainly do that and restrict the scope of this provision. But in the way in which now I'm explaining to you, they can't get over everything of which is said in Safari Retreat. They can get over, see, supposing the plant or machinery is amended to plant and machinery. Then whether Safari will still apply or will not apply. In my humble view, the Safari will continue to apply where it is leased out. Because the own use criteria is not there. That's what the Safari says. In my view, even if they amend the law prospectively, retrospectively, whatever it is, the leased buildings, I think, are home in 1750.
Sure, sir. So there was another aspect of intention of usage, right? I think it's very common that people set up or construct something with the intention of using it in a particular way.
Yes.
But over a period of time, there will be a change of use, right? Depending upon the circumstances. So would it be okay to say that this will follow in case a person is able to take credit based on the usage or intended usage? In case of change of usage, they will have to go through section 18(6) then?
That is one. Rule 42 is there, which allows this kind of changes, and they adjust the formula accordingly for common input services.
Right.
There's no doubt about those things. See, ultimately it is this. I may say, for example, lease it out for 3 years, 4 years. Then I may get an offer to sell the building. Correct?
Yeah.
But that doesn't mean that the credit I took in the first place is wrong. See, always the rule has been, and this is also internationally tested, the rule has been that you decide the credit, input tax credit at the time of availment. When you avail, what is your intention? Obviously, the government can't go into your head to find out what your intention is. Sometimes even you may not know. See, you may intend to use it for leasing it out. And let's assume that 3 or 4 years or 5 years down the line, you find that you get a very attractive price for the building as a whole. You may decide, no, I will rather sell it. You can't therefore say, because I'm selling it after 4 years, that your intention at the beginning was to sell one. No. So in my opinion, you'll have to go by the stated intention and facts as it is. This is how I would take it. So the credit in those cases also will be available.
Sure. Should we then move to the Q&A session? Maybe if
yes.
we do have some questions.
We can move to the. Yes.
So I think this is a common question which I'm sure you would have heard from multiple people as to there are decisions that have been taken, right? Many people did not apply the Safari judgment of Orissa and decided not to avail credit at some point of time. Do we see a window for such taxpayers to go back and now avail the credit?
See, the problem is that 16(4) has been upheld, where they say the limitation period is sacrosanct. So that will be one challenge that you will have to face. And probably you can take, see, there's no harm in availing the credit if you don't utilize, because there's no interest.
Yeah.
The thing is that you will have to fight it out on section 41 and not section 16, because 41 doesn't have any time limits. So you'll have to take the credit and test it out. You are not, supposing there's a question here asked by Mr. Venugokhale. It's an interesting question. Building constructed in 2022, leased out till now. Can we avail this ITC on cement and steel now reopening the completed assessment? Unfortunately, the time limits have been missed. You should have availed the credit by 2023 November or as the case may be, when your annual returns were filed. But if you're not done that, how will you now take the credit? Now, there is one way of doing it will be to take the credit now and justify that there is no time limit under the returns in sections 41. So that is one way of looking at it. Slightly difficult way, but you give it a try. As long as you don't utilize it, there's no interest. If you utilize it, you'll have to be ready to pay the interest in case you lose. The other question is again a very interesting, well thought out question by Mr. Srinivas. Whether the term on own account in 17.5D is actually talking about construction on own account or about the use on own account. Very good. Actually, it is construction on own account. That's how the section reads. If I remember the section, it is construction on own account. Construction on own account means that I am. This is how the Supreme Court has, read it. It says if you want this to be a valid piece of legislation, you can deny only for personal use or when you're selling. You cannot deny for leasing. So own account doesn't include leasing at all. So they have inbuilt the usage also into this. Into the interpretation. To that extent, I would say, unless they amend the law, it would mean that the own account criteria. See, what is the own account criteria ultimately? When I say I'm going to put it to my personal use, it means it's a use of the building and not the construction, even though the wordings used in this section are construction on own account. So Srinivas is absolutely right if that is the interpretation that is placed. But what the Supreme Court says is that you should read it this way. Own account means it's meant for use, personal use. Then it is denied. To that extent, I feel that the Supreme Court has given a good interpretation, which is practical. It is practical as far as the industry is concerned.
Sure.
Very similar to principles on safari, other limbs of 17.5 such as lorries hired to say used for construction. Credit would be available in ITs and purchase leasing of lorry. It is not unusual to purchase motor vehicles for construction. For example, see the thing is motor vehicle itself is subjected to certain restrictions in 17.5. The motor vehicle for transportation of persons, there is a restriction. But motor vehicle for transportation of goods, etc., there doesn't seem to be any restriction. So there's nothing wrong. See, if you look at it for transportation of goods, there's nothing wrong in taking the credit and justifying it. It's all now open for interpretation. Absolutely. The Supreme Court decision has made it now easier for you to take credit, but with this caveat, I would say that you can take the credit, but the department will still issue you a notice and you have to be ready to fight it out. And you must, in fact, fight out these kind of cases.
Sure. So you made a very interesting point, and I actually had missed it maybe in the initial reading, that the difference that how classification of something as a works contract or not a works contract would probably come back to the fore as a possible dispute, right? In the past, we have seen department allege that some contracts have been artificially bifurcated to get out of the definition of works contract. And just to see if the transaction can fit into 75C rather than D, right? Do we anticipate some litigations coming our way on classification of works contracts?
Yes, see, they will now try to fit everything in works contract. Now they will say, what you gave is actually works contract service, it falls in 17.5C, it is not allowed. No, today you will start getting notices saying every one of your activities are works contract input services. And that man has not classified it correctly. These kind of cases, the department, I can tell you 100% they are going to lose these cases. Because if somebody has classified it as X, it will remain X in my hands. I can't change his classification. These are all settled matters and settled exercise by the Supreme Court. The classification adopted by the supplier of services or goods cannot be changed by the recipient, nor the officer in charge of the recipient. Very important. MDS switch gears case. Supreme Court is very clear on that. So if you try that trick, you're likely to lose the case. But you can't put it above the department. They will surely try to play that game.
Sure. We'll take probably one more question, sir. I think it's in the chat
No
box.
problem at all.
So this is where
Yes.
as a
For
strategy
23-25 construction of factory, can we avail credit? Yes, sir. Avail the credit, and for safeguarding limitation, don't utilize it. You'll have to fight it out. See, I have always said this, and I again reiterate and tell you this. Those who have not taken credit in the first instance because they felt safari, we don't know which way it will go, now stand to lose.
I think, can you hear me?
Yes, sir. We can hear you now.
Yeah, there is some problem with the Microsoft Teams, but anyway, is there any other question that I should answer?
I think we have answered most of the questions, almost all the questions that came from the audience. So I think
Is
we
there
are good.
anything else?
Yeah, I'm sure there are a lot of other questions that people have, but maybe I think this itself was a very, very enriching session. So we would like to thank you, sir. Thank you for giving us this time and your insights on this important case law. I think I'm sure everybody has learned a lot of new things today from this discussion. And we really appreciate your transparency, sir, in this whole conversation. It was really nice to hear something in a very candid manner from this.
Yeah, I don't think you could have expected anything else from me, at least.
Sure, sir. PVS, sir, would you like to say something?
No, wonderful. In fact, the moment I saw sir's name for a very important judgment which has come from the Supreme Court, obviously we have to pick the positives of the judgment, which we may be able to pick it up. But what we think as negatives, and sir brings out a positivity out of that. That is the interesting aspect I learned today. And that was a wonderful experience. Thanks a lot, sir, for coming on.
Thank you so much, sir. Thank you so much.
Yeah.
Over to you, Rupa.
Thank you very much, sir. And on behalf of BCIC, we express our sincere thanks once again for addressing our members. We look forward to have many more sessions in the future as well, sir. Thank you very much once again. And thank you, Mr. Ankit, for moderating the session.
Thank you, sir.
My pleasure.
Thank you, sir.
Thank you, sir. Thank you.